afternoon, everybody. It is, I switched my calendar. It's Wednesday. I'm looking at October. Well, it's Wednesday, end of the month here, September, and the market was, where'd this thing end up? Let me just make sure I've got this thing with the proper look here. We're still stuck on that. Some issues that kind of turned a little bit of fear into the market, but it did recover nicely, right back up to volume weighted average price, and it held the morning low. So let's take a look at a 10-minute time frame. You can see here that the highs from last week have generally held as resistance all this week so far as well. Basically, just below that 115 level, which again on the daily time frame is back to the levels from early to mid-May. That is the post flash crash recovery, basically. If we can continue to hold above here and push higher, then 118 would be the next objective level where it seems this market should be able to go. Yesterday I was talking about on Twitter. I said that that we wanted to be that it seemed nice that the market wasn't held hostage to every tick in the financials. And realistically, you look at these financials, they still are just really range bound. They've been pretty much 1380, but then down to 1350 as far as support, and resistance up at $15.10 a share. So the market is, the financials, they're holding above a 50-day moving average. I guess you could say that's positive, but really they're just more in the middle of this range. Pretty much a dead group right here, right now. There is a little bit of reason for concern, I guess, when we look at this 30-minute time frame, and that is we've been stuck below this 1460 level. 1460 was prior resistance, which became support here earlier in the month, and then when we broke down below it, you can see that support has become and is still offering resistance for the market. So support broken tends to act as resistance. Before we can have any faith in the financials assisting in this S&P 500 rally, they're going to need to clear back above the 5-day moving average. That 5-day moving average is going to have to flatten out, and we're going to have to get above this 1460 level. This 1460 level is the primary area that we want to continue to keep an eye on. As far as the bigger support here in the intermediate term, last week's low at 1420, which tied the September low. If we break down through that, then I think that the pressure from the financials will become too much, that the S&P 500 won't be able to hold up, and we'll start to see some further profit taking in that group. Now, I would prefer that the financials hold up. The bull market is a lot easier. It's been very easy to get gains here the last couple of weeks, and even as this market has kind of flattened out in here for the S&P 500, there's just been a tremendous amount of opportunity in some of the individual names. So the key levels, obviously, in the market are basically 115, 115 and a dime, and then we've got support that's really kind of been in this area here at the 114 level. So basically 115 to 115.10, and then 114 we can see has been tested here a couple times. Yesterday that was where the 5-day moving average was. We got back above that very quickly. If we break the 114 level, then I think what are we looking at? We're looking at that 1320 area again. And 1320, when we look back to the 30-minute time frame, we know is this bigger level here. So those are the key levels. If we break below 114, then I think it's pretty likely that we'll head down towards 113.20. So you're obviously going to want to become a lot more defensive in that type of scenario. If the market can get back above 115, and you look at the financials, they were down 11 cents today, but they didn't get hammered on that news. I'm not trying to be positive about it, because we were still down and we are still below that 5-day moving average and the important resistance. But we're not getting, if you look, think back to like a year and a half ago, that type of news would really rock these financials, and that which doesn't kill it possibly is going to make it stronger here and allow this market rally to continue with some help from, not necessarily leadership, but maybe some help from the financials. That would definitely be something that would be welcome, because it would allow this market to be able to sustain some gains a little bit further here. When we look at the, let's take a look. Where am I? I'm just got too many things on my screen. The Nasdaq was down 8 pennies here. It's holding up real well. This prior support, for short-term periods of support from last April. It's kind of a battleground in here now. We had seen the prior battleground right here at the post-flash crash high, which was at that, man, where'd my trend tool go? I can't see it. This looks like, if I open this up, that might be able to get it. 48.85, I think that's our level. But anyways, let me just try something else. And there it is. Okay, now I can see. And put that down, go up here, and now I can work with my things where I can see them. Okay, so the Nasdaq, that is, has been in this super uptrend, and it's not giving anything back really. There is some evidence that this trend is at least weakening through time. That maybe we're correcting a little bit more through time, but support levels are holding in here. Real near term, this $49.10 area is our first level of defense basically, and now we're kind of closing below that 5-day moving average. It still has an advancing look to it, and you could really short term, just a couple days, say we have a lower high. But when we look at that 30-minute time frame, it's been a beautiful uptrend, and anyone who's fought it is getting real losses in here. Apple, if you look at that, Apple's been the leader, and there's reason to think that maybe Apple is going to consolidate a little bit, at least through time in here. Okay, we can see that obviously we had this big rally from 235-ish up towards 295, so a 60-point rally. And even if we just pulled back down to where we kind of went intraday yesterday, would be an okay thing. But we do have right now this market, the Apple, that is, going to need to get above and hold above 290 for the buyers to really have a chance to make another push higher. Really, I mean, a rest would be a good thing, but back below about 286. Then perhaps we get a little bit of profit taking in Apple down to, I don't know, let's say the 10-day moving average. The 10-day moving average actually was pretty close by. But anyways, if we got a little bit of profit taking in Apple, I think it would spill over into some weakness in the Nasdaq, and that would be reason to kind of let the foot off the gas a little bit. Russell 2000 made it almost right up to that $68 level. That's been the highest since the the summer here. This June high is basically $68 a share. We came up and pretty much tied that. This market has been stair-stepping nicely higher. It's been really a nice pattern of little consolidation levels that get resolved in bursts to the upside. So maybe we're going to get another little consolidation here. But Russell 2000 continues to act healthy above all the rising moving averages. The semiconductors were strong yesterday. They reclaimed this 27 level last week that was prior support, turned into a resistance area. And near term, the 27 is still probably for this week going to be the most important level. We've got 2 days left. If we see some profit taking, we'd want to see it hold above $27 a share. And I already spoke about the financials. What really was this type of market environment that we're in right now, where we've had a lot of strength in here recently. The market's digesting kind of through time. What's happening here is a lot of the little stocks are really starting to get moving, and when you look at and that's often a sign of danger. It's something that you want to take advantage of and enjoy the gains that come from speculative groups, and it's not even necessarily, I don't know if you would really call them so speculative, but the solar stocks have been really strong here the last couple of weeks. We've been talking about JASO. That kind of hit that target that I was talking about a week and a half ago, right up here. So that would be an initial target that basically got hit after a nice breakout. It's still a very healthy looking stock. Seems to have gotten ahead of itself a little bit. But you look at, even the junk solars like CSUN, SATC, these stocks are moving, and there's still a lot of money to be made, I think, in these little plays. Canadian Solar, CSIQ, which is actually a Chinese company, Trina Solar, Yingli Energy, what was that? LDK this last week and a half really broke out. The solars have been a pretty easy group to trade here recently. Take profits as they continue to rise. Even SunPower had a good day today after this little consolidation in here. And these are the stocks that are moving, so you want to get involved in them. And at the same time, a lot of the big momentum names and heavily shorted names that are up near highs continue to do very well. So those are the types of stocks you want to focus on. You want to be aware, obviously, that the market is extended. It's been extended for a while, so that's not a reason to sell short. It's a reason to say, hey, you know what? Let's rotate into some of the ideas where we haven't seen a big run-up, ideas where they're a little bit closer to a level of support, and manage that risk and listen to the market and let the market tell us when to exit. And by the way, let me just bring up a couple other. I was mentioning these two stocks, U.S. Bancorp. Weekly chart looks off. So this is the counterpoint to maybe the financials can get their act together, but this U.S. Bancorp looks horrible. Wells Fargo on the weekly and daily time frame look terrible. Lower highs and lower lows. Wells Fargo seemingly breaking down. Today we had obviously negative news on J.P. Morgan. J.P. Morgan really looking more neutral. I'd say neutral to lower here. Breaking below this level could really be a big problem, but that's still a pretty far distance away down at that $35 level. Kind of more in a range, but stuck below that declining 5-day moving average. So intermediate term, the financials are guilty till proven innocent. The S&P 500 kind of becoming a little bit more neutral here, but with a primary uptrend. It's really basically neutral, I guess you would say. So let me take a look and see if you guys have some things you want me to take a look at. RKC, Doug Cass is pressing shorts. That's fine, good for him. Brad, thanks for the retweet. Derek as well, about the show, that is. And let me see if my subscribers have asked for anything over here. They haven't, because I didn't remind them to. But John Janis says, how about if I get a chance to look at Micron Technology, higher highs and higher lows starting? Question. That 30-minute time frame, I like that breakout past 720, and now pulling back to that level. So we had a little nice consolidation above a rising 5-day moving average. Really took off, but pulled back pretty deep here today and did close below the volume weighted average price. Let's back it up to the daily time frame though. Still though, I think it's having problems with this declining 50-day moving average. So on a daily time frame, we're still in a downtrend. We've got this. We've got maybe the beginning signs of accumulation. And typically, so if they don't scare you out on the way down, you're going to have to undergo some accumulation, and it's going to take time for the buyers to really gain control. So I don't really see Micron as a great bullish scenario here with this declining 50-day moving average. Generally, these rallies will fail with a declining 50-day moving average. They could get maybe up to 760 or so, but if they don't scare you out, they're going to typically wear you out. And I think the stock still needs to heal in terms of time. How about a look at DBA for Better Be Ready? Let's take a look. I think it's a commodity ETF, right? It's in a fantastic uptrend. So this is the commodity index, basically ETF. I don't know what it's constructed of, or whether it has that the problems that all the other ones have with the what's that word they use for it? I don't even know, contango. I don't know if it has a contango problem, but it looks like it probably ought to head up towards the highs from 2009, which were about 28.75. It's a nice pattern of higher highs and higher lows above a rising 10 we've got a rising 10, 20, and 50-day moving average, looking like it's trying to find a little support at that 2730. So intermediate term, I think 2730 is probably an important level. Bearishly, you could say maybe it's creating a right shoulder, but I wouldn't read too much into that. But if it breaks 2730, it might be in need of a deeper pullback down towards about 2670 type area. But it's in a nice uptrend. I think it just needs to consolidate these gains a little bit, correct through time a little, and then maybe rebuild for another push higher. But it definitely is in a nice uptrend. So looks like that's the only questions here. At least on my Twitter, that's all I'm seeing. So I'm going to close this out now, and I will talk to you guys again on Friday. Trade well till then.